Well, I can't stop thinking about this tweet from John Comiskey about FHA mortgages at high risk for loss mitigation, disposition, foreclosure. He's saying that he thinks 250,000 FHA foreclosures will happen next year. Now, look, I am pretty optimistic. I actually think I'm more optimistic than I've been in years on the housing market. But if there was one area that I would wholeheartedly agree there are major warning signs, it's in the FHA market. So why are FHA mortgages so bad? Well, you are able to get an FHA mortgage with as little as 3% down. So if you were buying a $500,000 house, you put 3% down, that means your loan would be $485,000 to buy that house. Now, here's the problem. Not only do you put $15,000 down to get that $485,000 loan, but then they tack on mortgage insurance and loan origination fees. These could cost anywhere from $5,000 to $10,000, and they'll put it on top of your loan. So a 3% down payment on a $500,000 house may end up with a loan of $490,000 to $495,000. That's basically 100% financing. Now, after 2022, when interest rates spiked, these mortgage payments went well above where rents would be in these areas. That means that if you were to buy a house and put 3% down, not only could you not sell it on day one without writing a huge check, but you could not rent it out if you had to move without writing a huge check. Add to that you can get an FHA loan with up to 50% of your income, your gross income. You could see how someone wouldn't be able to afford these mortgages very quickly. And therein lies the problem. You have a high-risk loan from a high-risk borrower taking out almost 100% loan to value, and then they have no plan B if they're unable to make the payments. These are ticking time bombs, and that's why FHA delinquency rate right now is up to 11%. So we actually know where they are. That's kind of the cool part, is we know where the forced selling is going to be. I actually just went to RealTracs. You can do this too, especially if you're an agent. Go to the 9 counties, look at FHA terms of sales here, 9 counties for Greater Nashville, and you just click on search, and you can see where these mortgages are. Now, what I did was I downloaded these. I chunked them into 5,000 at a time so I could download them. And then I put them on an FHA map. Now, I'm going to come back to this map. Don't worry. But first, I want to talk about a little of the Nashville dynamics here, because I think people confuse supply, demand, and distress. Okay, Nashville is a city where we continue to see people moving here. The Nashville area of Chamber of Commerce, 28,000 jobs added this year. So even though we're seeing high announcements about layoffs, we're still seeing a net incremental increase in jobs. It's slower than it was in 24 and slower than it was in 23. But if you look at this employment number, 28,000 jobs year to date, and you factor in that 30,000 people moved here, which is what they said, 28,000 people moved to Greater Nashville, it seems like we're at full employment mostly in Nashville. Now, if you disagree with this, leave a comment below. Tell me what you're seeing. But according to this, it's a fairly optimistic piece. Now, it's from the Chamber of Commerce, so of course it would be, but this jives with everything that I'm seeing. If you look at migration report from Redfin, it's still showing the same amount of search volume from the same similar places in 2025 as it did in 2024. Even this right here, we can see that I posted this on Twitter, but $3 million sales went parabolic in 2020, 2021. That's when the migration went parabolic. It's when we had this influx of migration. Well, guess what? It hasn't slowed down since. And here we are in 2025. And what are we seeing? We're on track for 426 $3 million transactions in Greater Nashville. Now, when we look at contract volume, of course, it's flat, even though mortgage rates are down. A yellow flag, it should be up, in my opinion, but it's flat. It's not down. By the way, median price is still up. I actually think it will go negative at the end of December. And the reason I think it'll go negative is actually because of mix shift, right? We're starting to see the under contract listings shift. This is 23, 24, and 25. The maroon is 25, and we're seeing it increase in the lower price points while it decreases in the higher price points. So that's a shift. We haven't seen that all year. It's starting to shift. I think what we could see is for this median price to actually drop below the median by the end of the year. We'll see if I'm right. Nonetheless, let's go back to the FHA that are high risk for loss mitigation. We downloaded them, we popped them into a map, and what do we see? We see the north side of Nashville. That's actually been a pretty soft area, although I think that's more about these short-term rentals. We see White House, Tennessee. We see Gallatin. We see parts of Lebanon, a little bit of Mount Juliet, the Smyrna-Laverne corridor here, and then south of Murfreesboro. Guess what? Guess what these all have in common? A lot of these are new build neighborhoods. If we go to my neighborhood tracker here and we just pick on one of these neighborhoods, let's go south of Murfreesboro here. We can see, I think this is an area, Waldron Farms. Let's see, 2174. Okay, so let's go here, Davenport Station here. What we're going to do is just look and see what's going on here. We're going to click on built info so we can see almost all of these are new. Green is new. You can see almost all is new. You see the existing has to sell below the new. So that orange is running below the green. FHA and VA, look at all those FHA and VA loans from 23, 24. And when we look at sales price in this neighborhood, some of these went for $650. Holy moly. Hopefully those are, oh my gosh, look at that. FHA, VA, FHA, VA. If you're going to live in a neighborhood crowded with FHA and VA, as this map would share, they're all going to be primarily new build neighborhoods, clustered FHA. Talk to your agent. Talk to your agent and say, how many FHA and VA loans have closed in the past 18 months? That's going to tell you it's highly leveraged, high interest rate, and there's no room to sell it or rent it. You cannot rent it out. You'll be writing a check every month. If you sell it, you're going to be writing a check. If I was buying in this neighborhood, here's what I would do. I would find one of these guys, one of these 21 and 22 sales, because look, prices have not gone up. Prices have not gone up. It's unbelievable. You're going back to 2021 prices. I'm going to find one of these guys that's an FHA or VA, and I'm going to assume their mortgage. And I'm going to buy a VA for very little money down because I'm getting it for 2021 prices. And then I'm going to have a low down payment and I'm going to have a lower monthly payment than I would otherwise have in this neighborhood. If I'm looking for those FHA clusters, and then I'm trying to assume a mortgage if I'm buying in that area. If you're not buying in that area, guess what? In single family homes, I mean, again, going back to this, there are tons of people moving with tons of money, and they don't seem to be distressed. Now, if I'm wrong, help me see that I'm wrong. But overall in the Nashville market, transactions have troughed. I think in 2026, we're going to see more transactions than 2025. I think we could see the median price be flat to slightly increased. And I think what you're going to see is distress in some of these outer bands. And the level of that distress will determine whether or not we see the median price start sinking. But you got to understand, it's neighborhood by neighborhood. It's area by area. Hyper local is the key. With that, be careful out there. Pay attention. Use data. And I hope you all have a great weekend. I look forward to seeing you next Saturday. Thanks for watching.